Okay, so we're up into Wednesday. So far I hope you guys are having a good week because everything is going according to the up motion like we said. Now yesterday gold didn't come back down here, but I did say if it comes down to the daily pivot, which is the 61.2 on the Fibonacci, remember I drew the flag yesterday, and this is the bottom of the flag, and this is where the trading hour is. So let me just do that from yesterday's video, right? So it was something like this, and it was going to be like 62.5 was down here, remember? Wait, I just have to bring this down a little bit. Okay, so in any case, I did say we want to go up if the market comes into the mid zone to fill in the gaps, but if it comes to the bottom of the flag, I said you can also go long with this one. If you did, you should have made a killing because this was a trading hour at the bottom of the flag. This was a trading hour. Okay, again, making a U-turn here. All right, so I hope that worked out well. All right. If you've learned from me, you could have also waited for a U-turn, right? Say, well, you know what, I'm just going to wait to see if this is going to U-turn. Then you could have entered here, okay, and then put a stop loss here. Or here, even if you entered here, you would have had a slightly further stop loss, but in any case, you would have covered at the top here and then let it, just followed forward. Yesterday, I did say we've got room to go up, as you can see, and that's where we're going. Okay, so what to do today? Does it still have room to go up? Well, looks like I've marked in a place over there from before, so that's got room to go, 2,888. So we are going towards 3,000, as you can see, so it has room to go. Any pullback is fair game. 77 yesterday, as you can see, it was like pretty much there. The low off yesterday was, as you can see, 71. Okay, so that's yesterday, and it broke out. So today is like a goodbye kiss at the 77, which is 2,837.38. If you're using your PST, you would be on top of your game, which is there, 2,837.38. That's 37. That's pretty much 38 there, look. Okay, 39. So this is the zone where they bought. Okay, as you can see. So there you go. All right, pretty much on the PST going up, so it's got room to go. So if you follow that through, great. Now today's Wednesday. What to do? We'll still have news today, which is fine. Okay, it's not a problem. Let's refresh that. I don't check the results of the news at all. I just pretty much do what the timing says. Okay. And now we've got news. I did say in the beginning of the week that they could be psyching us up for the non-farm payroll, which is what it looks like it's doing. Sooner or later, though, what's going to happen is we're going to have to come back and then go back up again, just like it did here. Okay, you can see it went up, up, up. Okay, you see that move. Let's do this. So the market will, at the end of the day, do something like this to push us back down, and then we'll have to go up again. You see, here it is, going up, and then a boom, up. So going up, and then we're going to have a boom, and then up. So that kind of routine is what we're following. But Monday was a swing day, beautiful, just follow through. So today, what to do if the market does come back down again? This is too high. You don't want to be buying here, okay? This is all-time high. So the only time you're going to be buying is that when we have a setup again. Now, this is a runner with the impulse wave, as you can see. So what you have to do, okay, that's your impulse wave. This is your runner. You'll have to break for a stop loss takeout, which is going to be underneath this line here. Okay, so the market will want to come break this line and then go up. So maybe from here again. Okay, so if it comes back down to go back up. Okay, but you know, buying from the tops is obviously going to be a little tricky. Also, we are on the weekly targets, as you can see here. So those are done. So following it there is all good. All right. If you bought gold from the initial stages, you should have also been just fine. Okay. And that's basically it. So if we have a bang, bang, and another hit, we should have a pullback, but don't buy the highs. Obviously, you're going to get yourself into trouble. Trading hours pullback, okay, or if the market does a stop pullback, stop take, sweep out the stops, and then go back up. That's also okay. All right. At the end of the day, though, this is a runner. It's aggressive, as you can see, and we've got room to go up. So wait for the pullback. Euro dollar. Now with the euro dollar as well, I said yesterday, you know, if it comes back, we should go up. Yesterday on the PST, remember in the video, I did say 1.0284, I must have said, which would be on 34, 1.0250 on the daily. This red line there, okay, which is the HCL1. All right, so now we've got a breakout. This is nice and easy. All we got to do is follow it up. Okay, remember, we've been buyers, like I'm saying, we're buying the euro dollar upwards. Okay, since this pullback, you know, everyone should be on the buy. Remember, we waited for this. Okay, so 1, 2, 3, 4, 5. Market pulls back exactly to the location that we're looking for, and now going up. This uptrend we will confirm once we break above this. That will be in 3. It will go up, and you will see that waving and waving and waving. We will go all the way back up again. All right. So remember, imagine that third one will probably take us all the way into there, at least into here. As you can see, that's twofold. So there is room to go up here. So on the pullbacks, okay, any market impulse, wait for a pullback, and then just keep pushing. Now here we're on a PST breakout at 46 here, 1.0364. If you take a look at your hours, okay, here we are. Right, this is not a bad place to even go long, since there are no gaps here. The other alternative is, because this is the high of yesterday, but we have a PST breakout. If the market comes back, you can go long with this one. Okay, as well, I've put the hours here. The hours for today, what's going to be important is 11 o'clock, 1 o'clock, and then at 3:15, like towards 3:15, like 3 o'clock, 3 o'clock as well. You know, just look out for it. These are good hours to trade. Once we find direction, we should just be going in that direction. Okay, so the news is also coming out at 4:15, so that is going to be for us a zone. All right, so let's pull that down, and that's basically how we should pan it out. Okay. All right. So those hours are okay, like I said. Now here, okay, back in focus now. 46 is 1.0364. 1.0364 is down here. 64. Okay, so we're here. So this is pretty much 064, as you can see. All right. I don't think that's a big gap happening there. These are like pretty much filled in. But anyway, if we come back into these hours here on the daily, I think we're like okay to follow this up. PST breakout, I always say, is kind of like good to go in. Just be mindful for volatile moves from 3 to 3, let's say 30, and that's actually a good zone to trade. Okay, like 3 o'clock. Also, like I said, 11 o'clock, 1 o'clock, they're like good to trade if we find direction. And like I said, that should take us into 9:30 to 10 o'clock. And in Asia session, we should have a place where the market will feel that it's just the level is just not attractive. All right, so it's just not going to be attractive. So we might have a pullback into tomorrow in February, the 6th, Thursday. So in Asia, we might have a pullback into London pre-trade session. Okay, so we'll see how that pans out, but those are the hours. Okay, so there we're good to go. This bar is the manipulation here. Okay, so just you guys all know technical analysis, so there's not much to say. The only thing I'm really adding here, for those of you who haven't done timing, is the timing plus the PST pricing. Obviously for us that's like crucial, okay, because PST is like, it gives you a clear-cut price, like yesterday as well. Anybody who's using PST, if I don't mention PST pricing, just check it out. Pause the video, look at here. This is 55, 56. That's a price of 1.042634. So that's where we're heading. All right. Then we've got 0471 on the 60. That's where we're heading. So those are the targets we're going for. So, even if I, skip it, some of you are using it, some of you are not using it. Just check out those levels and just take it from there. Okay, and that's it. Okay, let's take a look at SP500 now. With SP500, yesterday I had an in and out trade on this one. Okay, and the reason I entered, I had a euro-dollar trade yesterday, okay, which I did put on there. And remember, I said it should fall down into the mid-range, which it did, and it hit a PST level. So I took profit on that, moved the stop forward, and on the pullback here, I just left it, and it got stopped out, and it started going up, which is what we were expecting. We were expecting the market to go up, but both positions closed with a profit, so there's no loss of love there at all. In fact, there is profit. So it's all good. Here, as you can see, when the price came down, the hour was here, right? So the two things you can do here, when you're doing your technical analysis, you've got to say, well, wait a minute, we're looking to buy. It hit the PST level. Plus, this is a breakout now at the trade hour, okay? So anybody following this would have been in there with a stop loss under this bar. It would have been that close. Why? Because if the hour is right and we're going up, our bias is to the upside. You enter on this bar. Let's put that in there, right? So you're entering at 1.0305. Your stop loss should be 1.0292. That is pretty close. Okay, very close, as you can see. All right, so let's move on to SP500. Now, SP500, remember, is in between levels. And I said on this one, it's going to be a little tricky because we've got Wednesday, Thursday, and Friday. Okay, so I said it can be a 3-day turn zone. Friday was a swing day. So now, Wednesday, Thursday, Friday, we're going to see how these things pan out. Okay, so if you're trading this, be a little careful. Yesterday I did a trade on this one. Okay, I couldn't post it up, but it was in London. Here it was. Okay, now this is London zone, right? And that's the trend line here. Okay, look, we're doing exactly what we learned in technical analysis. We're not doing anything different. Bottom, and then we've got a bottom here. Okay, you see, why did I choose this line? Because you see this line touches more bars. Okay, this is an extreme bar, it's a stop sweep, fine. And remember, we're just taking the line with the most bar touches. Okay, we're normally drawing it bottom to bottom, which is the way we do it. But if we have, like, stop sweeps or extreme stuff which are out of the regular, we take the line which touches the most bars, remember, from the strength of the bar. Remember the trend line strength portion of the course. Then this happens to be the London trading hour zone. So I figured, okay, let's go in here, all right? And this is the one that made me the money yesterday, all right? So that was like good time, good place, and so on. With respect to the euro dollar, it was a good price. The time was off, okay? This is why I'm looking at three stuff: one metal, one forex, one index. Okay, you can choose anything you want, whatever you want to trade. Okay, at the end of the day. So with gold as well, this was yesterday. It was good to trade if you took it. This was the way to go, because this was also a nice one. Okay. To trade, this is the trading hour. This was where the daily pivot was. It's the bottom of the flag. And I said this is one of the locations where you can get in if price and time is logical. It was. All right, and this is how the market, if you missed it, it gave you another opportunity. If you missed it, it gave you another opportunity to get in. Okay, so, this was like pretty good if you followed it. Okay, so on the SP 500, we're going to now have to be a bit more careful. This has got room to maybe push down a little bit more. I wouldn't mind if it did, okay, because if we find ourselves on the lower end of the spectrum, like if it falls down into Friday next week, I don't mind buying from here or lower. Okay, ideally we'd like to come lower. Now the support for today is 39, price of 5940. So 5940 is going to be on the cards for us on the PST. And this is a place where if you can see the market took off. Okay, so coming down into 5940 is okay. We don't mind doing it. Okay, right there. Okay, so this is a zone that the market can come into. If they buy, it'll be from here. If you check the weekly, okay, you see we're in between levels. 49 is 5849, and 5849 is down here, which we should have already put in there. Okay, 5849 right there. So call it 5850 just to round it up, because they're pretty close anyway. All right, so that's a nice round number. Okay, so the market can actually sizzle down with this, but this was, you can see it was just like nice and easy, and then okay, just let it go. All right, and if you take a look at the hours in the evening, you can see we had on Tuesday, could flow until closing. I did say it did come up. Well, that's where the market closed, but it just went up, as you can see, like pretty much to the high of the previous day, and then sold off. So this had a bit of room to go. You could have followed it at least until the daily was here. So to the daily and to the weekly, you could have followed it. I didn't follow it up too much, okay, because the swing days, it wasn't a swing day, and the swing days are coming up, but it was enough to make okay on the account yesterday, actually, so I can't really complain. So if we pull back, if we go short, it's good. If the market comes down, we can go up. If the market goes up into the swing days, you just need to be careful because, you know, Wednesday, Thursday, Friday, anything can happen. Okay, we've got 3 days, so, you know, just have to be careful. With NASDAQ and Dow Jones, it was Tuesday. So let's take a look at Dow Jones first, as usual. Okay, this is Dow Jones. Here we are. All right, you see the market coming back nicely yesterday and then taking off back into the highs again. So will this fall down again? It could. It could. Let's take a look. Okay, remember Tuesday was a swing day. So is that the high? Because Tuesday, look, this is Tuesday, right? And it's a swing day. So the market comes up, and yesterday it does not go higher. All right, so, you know, it doesn't go any higher and it just sells off from here. So on the daily, let's take a look where we're at. Okay, daily. So here we are, and Tuesday. All right, so selling might be the way to go, and all the way into 50 would be 44,056. 44,056 is going to be here, isn't it? Yeah. Okay, so that's the zone there. So that's on the daily. Pushing down into here is doable. Okay. And if that breaks, obviously, you know, we've got room to come down. On the weekly, let's take a look. The weekly, we're like in no man's land. Okay, so stops are swept. We'll have to see how things pan out. If it breaks above this, let me first of all get rid of this because we're having too many lines here. Okay, so this is the setup. Let's do this. Okay, so this is our setup. If the market comes down into 44,058 or 56, whatever, right, comes down here, then I wouldn't really go for a buy. If the market comes down here, does a stop sweep, and, you know, is low, and if you want to go high with it, it's doable. Okay. Else, you know, don't stand in front of it. The only time you can really, you know, buy this, safest way to do it anyway, is if it breaks above the high of Tuesday, closes above there. Okay, closes above, hangs around here for a while, and then pulls back and then goes up. Okay. Other than that, though, you know, Tuesday being a swing day, selling to the downside, you know, is looking like a better option on here. So we'll have to wait for the news. Obviously, you can see here the news came out yesterday, and then, you know, a bit of an up move and then a sell down and so on. So at the end of the day, I think we might have room to come down. Okay. In any case, though, if we're on highs, we're sellers. If we're low in those levels, cautious buying. Okay. And if it breaks above the high of Tuesday, then, you know, obviously, we're going to have to go the other way. All right. This is NASDAQ. So here we are with NASDAQ again. On the weekly, as you can see, we're right on there. Okay. Hanging around at 61, which is the resistance 21,736. So 21,736 is the 21,736. Okay, and that's where the market sold off from. Okay, that's Friday. Okay, now Tuesday being a swing day, that's your Tuesday, and then the market fell off. So If we break below this and then come up, selling is okay to push further down. You have to cover your trade here. Okay, so this is, as you can see as well, market going upwards, okay, in that formation, which is fine. Maybe. All right, so that's the formation there. So if it heads back up here, you know, selling again is okay, and that might take us into the, you know, future swing days. Okay, but at the end of the day, as you can see, that's your Tuesday. The market went up, and then, you know, that's the high that it did on Tuesday. All right, so being a swing day, if it goes above that, we'll have to follow it into the next swing day. Okay, because Tuesday being a swing day, breaking the high of the previous day, okay, then, you know, following through will take us into Friday. Let's take a look at Bitcoin. All right, so indices are a little tricky. So once you decide on your bias, just make sure you get time and price right. And this is like why it is the best way to trade, because you can, like, you know, say to yourself, well, is it the right time? Is it the right price? That's one question. Is it the right time? That's another question. So now with Bitcoin as well, remember we had Monday, Tuesday, and today as well, right? So Monday, Tuesday, Wednesday. So Monday being a swing day, it came down, went up, beautiful. Tuesday, we're back into a retracement. So this is nice to see. This is a sign that the market may keep pushing up. As you can see, that's a nice 50% move down here. If we pull back down into a trading hour and whatever, it's good to continue. If you're down on your flag formation at the bottom of the flag formation at a trading hour, you're good. All right, so that is the zone. All right, so if we dip down again, do a stop sweep, it's a trading hour, you want to go up from the lows, you can. Okay, it's not a problem. If you take a look at the daily, we've got room to kind of like push up. You see how it's sitting nice and tight there, right inside that channel. Okay, and that PST level, the HCL1, 94,456. 94,456, pretty much. Oops. Yeah, we're about there. Okay, so it's just like if it dips down, you want to go up again, you can. This is where the manipulation happened, and market broke out above the high. So coming back, you want to go up, you can. All right. If you want to buy the lows of the channel, fine. If you want to buy with a U-turn around here at trading hours, if it's in the middle, you can do that too. We've learned all the techniques to enter a trade. Okay, so you can. All right. This is why, like I always say, matching the time is the most important thing, because if you have the time, then you're in the middle of nowhere. Okay, you're in between levels, but you've got the time. So once the time happens, then you can wait, because if the market starts to turn starts to make a U-turn, you can enter, and this is why the colors change, right? Remember? But I've already taught you in the coaching how you can make a U-turn. So all these, even if you're not using ATAM, you guys know how to do it. Okay, have a good one.